Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Polygon's 𝗕𝗕𝗪, more specifically to look at a longer term picture and why buying and holding at least 10,000 𝗕𝗕𝗪 might be a fantastic opportunity for the future. Now at this point I will point out that I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. If you do have access to a financial advisor, you should probably consult them, but do treat this just as educational purposes and for entertainment purposes only. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you do find this information useful and informative, smash that like button. We do appreciate that here at Cheeky Crypto as well. If you're looking for a little bit more, check out the Discord, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Okay guys, let's go ahead and jump down into this one. We're going to be taking a look at a couple of things. We're going to start things off here with Polygon's 𝗕𝗕𝗪𝗧 paired up with USDT on the weekly, and Binance is our data source. And well, we can see that we had a really good run in the previous bull market, right? We can kind of acknowledge this either starting down in 2019, or we can take a look at it from 2020, March 2020, right down here. Okay, we're just going to take it from the March 2020 low because it is consistent with many other cryptocurrencies, and then we'll just roll this up to the high. Okay, this is basically 46,000% in gains. Unfortunately for Chris and myself, we were able to get into Polygon 𝗕𝗕𝗪𝗧 right down in these incredibly good low areas of 0.5%. Obviously those times have gone, and looking forward, we're going to be looking at decent prices, but not quite anywhere near the same level as they were back in 2020, and that's a positive thing because it does show progression when it comes to Polygon's 𝗕𝗕𝗪𝗧. Now in this video we're going to really focus on the technical side of 𝗕𝗕𝗪𝗧, but we should also be aware that from a fundamental standpoint, Polygon's 𝗕𝗕𝗪𝗧 is going to do incredibly well. It is a layer 2 scaling solution for Ethereum, and even though Ethereum has now pivoted to proof of stake, it is still slow, it is still clunky, and it is still quite expensive. So these scaling solutions such as 𝗕𝗕𝗪𝗧 I think are going to be very much sought after during the bull market. So Polygon's 𝗕𝗕𝗪𝗧 isn't going anywhere. It's made some strides with many different things fundamentally, everything from the NFT space through to just DeFi and things like that. So there's a huge place for Polygon's 𝗕𝗕𝗪𝗧, and I don't think the demand for 𝗕𝗕𝗪𝗧 is going to slow down anytime soon. So from a fundamental standpoint, I think it's pretty solid. From a technical standpoint, however, we have still got some concerns here that we need to consider. Okay, so although I did jump into Polygon 𝗕𝗕𝗪𝗧, I think it was around 46 cents, somewhere around here, and we did incredibly well, I still think we've got further downside to go. Okay, so let's kind of bear this in mind. Just because I purchased here doesn't necessarily mean that I thought that the bear market was over. I just purchased down here because the price was in a good place and it looked like we're at end of a structure. Now, of course, I'm saying that we're coming towards an end of a structure to the upside, and we've got to think about where this price is potentially going to the downside, right? It's always about making sure that you're aware of where the market structures sit. Now, on this macro level of our weekly, we can see that we had a break of structure over here to the upside. This is the previous bull market to the upside, okay? Now, the good news is that that hasn't been broken, not at this level, okay? So this break of structure where we had this fantastic run to the upside is still very much valid. Even though we've been in this bear market, at a macro level, it hasn't yet finished moving up higher, and that's a real positive. So from a smart money concepts point of view, the break of structure down here is a good thing. Now, the concerns that we have is we've got these fair value gaps, these imbalances in the order books that have been left behind. Now, for the most part, these usually get filled out at some point in the future. Okay, now it can take years on some occasions, and sometimes it can happen really quickly. But we should note that there are several of these on the chart. The most concerning would be this one down here, that for argument's sake, we can argue March 2020 practically did fill this entire thing. There was just a marginally small area just down here at the bottom. Let me see if I can actually grab hold of this. It's not going to let me. It's basically this little slither here. This little slither, unfortunately, didn't quite make it to where it needed to go. But for the most part, I would say this is actually pretty much complete. I'm not too concerned about this small little area that didn't quite get filled out during March 2020. So I'm going to kind of park this one for now, but we should be aware that this would basically be indicating 0.5% for Matic, which I do think those times have unfortunately gone. As much as I'd like to see Matic back down at those low prices, I just cannot see it happening anytime soon, if at all. So instead, we need to kind of think about that one being complete. And instead, we do have these areas down here that have not yet been filled, right? So we do have this little area around 2 cent. Again, I think that would be wishful thinking to think prices will go all the way down to those kind of levels. We do, of course, have the big order block down here, this discounted range, which is great, but I still don't think moving down into 2 cent is really viable. Now, we get slightly more viable when we start talking about 5 cent to about 6 cent. Again, still feels a little on the low side, really, to kind of be thinking about those prices coming in. The same with the 7 cent range through to about the 8 cent range. I think those are on the smaller side or the lower price side, will be very, very painful to see get hit or get taken out. But, you know, they are potentially within the realms of possibility, I think. Let's go ahead and just check a couple of things here. We assume that we've kind of reached this equilibrium area just up here, and we're getting rejected. We can kind of see the rejection at the moment. If this is to hold as our rejection and we are to kind of fall back down from here and not breach this high, or really kind of push past this consolidation, then, you know, really we'll be looking at this little range down here for accumulation, and it would fall between these two imbalances. A move down deeper than this would potentially do a lot of damage, I think, to the crypto space, and to retail investors specifically. But again, I wouldn't put it past the price action because it can be unpredictable at times. This would basically be 10 cent to 17 cent, which seems absolutely wild and very unrealistic considering that we are hovering around the 127. However, the same thing could have been said when we were analyzing things like 𝗕𝗘𝗪𝗏, when 𝗕𝗘𝗪𝗏 was at 28 cent, and I had to say, you know, it's likely that we're going to go down to like less than 4 cent, and you know, there you go, you can see it. And the same with 𝗕𝗓, 𝗕𝗓𝗓. When 𝗕𝗓𝗓 was at 192, I was saying it's more than likely that we're going to go down towards the kind of 30 cent ranges, and well, there you go, you can kind of see how these things have played out. And so when we kind of look at Polygon's Matic here, yes, sometimes it can be hard to kind of hear. It does look like there's going to be some further downside across the next few months, and there is still a lot of exposure that Matic has and Polygon has from those companies that went bankrupt, right? They had a lot of exposure to Matic, and therefore those funds are going to have to be liquidated to pay back their creditors. So at some point, we are going to see some selling pressure on the Matic side that could potentially drag the price down quite a little bit more as the supply enters the ecosystem or enters the market, right? And what we will see here is the balance between supply and demand change. Right now, there's a lot more demand potentially for Matic than the supply can potentially handle, which is why we see the price going up. But essentially, as soon as that supply comes into the market and, you know, drowns out the potential buyers, the price, unfortunately, will probably end up snowballing to the downside. Again, I still think that, you know, 10 to 17 cent is a bit on the low side myself, but we shall see how it kind of goes. Essentially, I'd be quite happy with a double bottom kind of scenario here. Anywhere really around this low level that we had previously of 31 cent would be a pretty nice place to be. Essentially, just look at this as the bare minimum of a double bottom like this, rather than extending down into those lows. But again, I think a double bottom is just kind of wishful thinking, in the same way that we're wishful thinking about a move to the upside. Now, at the moment, from an Elliott wave theory point of view, it does actually look like we have a couple of different variable options occurring here. It's a little bit difficult to say whether we've just topped out or whether we have a little bit more of a push to the upside. I would say that it probably has a little bit more to the upside if it really wanted to go to the downside. Well, a little bit more to the upside before we can move to the downside, I should say. But again, a little bit too soon to really know. Now, as I bring up our daily chart, we can kind of really focus in on where those key levels are. We can see that this move to the downside does have some key focus points for us, specifically down here at the 382. This is 28.2 cent, and this would actually make a really nice place for Matic to kind of consolidate on. And then we have the 13 cent around the 50% level. Both of these are the areas that I would be really concerned with. And then, of course, down here, we have that 6 cent range on the 618. And again, these are the three key areas that I would say that Polygon's 𝗕𝗪𝗔𝗥𝗘 will react to most likely as we start to think about retracing down a little bit. Now, the positive news here is there isn't a huge amount of data, but we can kind of run on the assumption that maybe there was some positivity here all along, and the possibility of running a kind of big 5-wave structure does actually sit with maybe this all being just a wave 4 before going up into the new all-time highs and push a little bit higher in terms of pricing. Now, we have a couple of key areas for us kind of scoped out. We have the $4.96 to $11.53 through to the slightly higher range of $6.18 to $17.29. But it really does depend on how low you potentially push back down. Now, obviously, we had a really good run here with this theoretical wave 3. And, you know, those were fantastic gains. We won't have as many gains in this next section to the upside. It's very unlikely that we'll move the same number of percentage points. But if we were to kind of pull back down, maybe towards that kind of 28-cent range, and then start thinking about a move to the upside, we could see 2,000, maybe even 5,000 to 6,000% potentially for Polygon's 𝗕𝗪𝗔𝗥𝗘. So buying and holding a substantial amount of something that I think is very much critical in the Ethereum ecosystem as a layer 2 scaling solution, I think it's kind of a safer place to kind of be playing rather than something that is kind of unproven, untested, essentially. So although you'll get less percentage gains on your investment, I do think that it will be a pretty solid place to be thinking about. Of course, you know, do consult a financial advisor if you have one. I'm not a financial advisor. Can't give you financial advice or anything, but I think 10,000 𝗕𝗪𝗔𝗥𝗘 at these kind of low senses, it's achievable, even if you have to kind of do it staged out and slowly dollar cost averaging over a period of time. And acquiring around the 10,000 𝗕𝗪𝗔𝗥𝗘 could be a pretty decent position ahead of the bullish market, which could take us into some pretty decent highs. I do think that it's overpriced right now for what it is, and I do think actually cheaper prices are likely to occur, which will obviously allow us for more percentage gains later down the line. Overall, there's still the potential move that we do push up higher, but I think we'd have to see a very, very significant amount of demand for Polygon's 𝗕𝗪𝗔𝗥𝗘 before we can really talk about pushing significantly higher around that kind of $64 range. Although that's a possibility, I just don't think it's necessarily something that we can discuss just yet until we start to see that next set of structured moves to the upside. All in all, this looks very corrective at the moment. In terms of the move to the upside. So to me, it does look like we are just doing some kind of corrective structure down. And again, we could be seeing and targeting out those kind of 14-cent ranges. But like I said, a double bottom would probably be good enough for most people. And if you're going to risk it for a chocolate biscuit, there might be a little bit more room to the downside after that. But we'll see how it kind of goes and how it plays out. But I'm going to leave this video right there for now. If you have found it useful and informative, smash the like button. If you're new to the channel, subscribe. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. Until the next one, though, guys, have a fantastic day.